Welcome, everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, without further ado, let's get on to the topic at hand here. We're going to mix things up a little bit. The topic is instrument selection is key to your success. And I'm going to sprinkle that with some trade entry discussions. I'm going to try to get back over to the chart screen, and I hope I can do this correctly. Do we all see the NASDAQ chart? Nazi? 4-range Nazi? Nazaroo is good for you. Okay, good. Hey, Chris. Welcome, everybody. Don't worry. I see some folks still coming in. We're just getting started. You haven't missed anything yet, so no problem. All right, we have some new traders with us here. And so what I want to do is just a very brief sort of refresher on exactly how and why and where and what we do as far as our trading is concerned. I'm going to do this NASDAQ chart, but I do want to get to quite a few other instruments to fulfill our goal of talking about instrument selection. Now, what you see here is background colors. You see the bar colors. You see the predictor, which you can toggle on and off. That's the ovals with the support and swing levels, support resistance levels. You have the mid-band, the big thick line in the middle, and then of course, you know, we have 1, 2, 3, 4 bands above and 1, 2, 3, 4 bands below. That's the most prominent thing on the chart here, obviously, is the mid-band. Markets, as we know, go through. Yeah, we can look at some other instrument, Carl. Yeah, we'll pull up some currencies, definitely. Let me just get a quick refresher out of the way, and then we'll start to pull up all sorts of instruments for everybody to look at tonight. I'm here in California, so midnight Pacific on today, the 16th, was right here. So this is the beginning of the European session, the tail end of the Asian session. So you can see that in the Asian session, which starts about 5 o'clock my time, so just change that to whatever time zone you're in there, that the NASDAQ market was already heading up. And let's go back even further into yesterday, that there was quite a bit of a sell-off. You can see there was a pretty good sell-off here into the close. The market closes at 1:15 my time, which would have been right over here. So ironically, after this big sell-off, where you had a couple of short entries at the mid-band roll, so you had a nice short trade here, another short trade here, got a little sort of a triple bottom here. And then right into the close, this looks to be short covering to me. But then later in the evening into the Asian session, some buying kicked in. Now, when a market is going up, you have generally speaking, a green background, blue bars, predominantly blue bars. The bands and all in the mid-band are all stair-stepping up like such. And so what we do is we buy retracements. So it's the complete opposite of what you do in a downtrend. A downtrend is completely opposite. The background is red, bars are stair-stepping down, mid-band stair-stepping down. And so we sell retraces. So for instance, when we say there's a trade here, here's the thrust down in the market, triggering the background to red, and then of course we see a move up here. So this is your trade. There's your short trade. In the case of a downtrend, you're shorting rollovers, retracements, right? It's quite the opposite in the case of the uptrend. Here we had short covering into the close on NASI, right here. That's that sort of shotgunning up, if you will. And then notice how it comes back and kisses and sits on the mid-band on a beautiful retracement right into here. So if you were trading this Asian session, this was obviously your buy entry right here, right? You could have put a line, use the ray tool, a region box from Object Trader with a close above. You'd be long on that bar right there. And then you can see that she topped out, got a scalper off, and then found support at the top of the region box, and then off she went. You got another long trade here. So there was one thrust, there was your second thrust up, and here's your pullback into the mid-band right here. Now, when I talk about, when we bring up the subject of instrument selection, what do you think are factors that come into play in regards to our desire to trade that instrument? Let's think about what are favorable things that are good that would make an instrument desirable to trade, and what would be characteristics that wouldn't be so good, that would cause us to pause, consider, and perhaps not decide at that particular time to trade that instrument. What's the good stuff and what's the bad? Any ideas? What's the good and what's the bad? What's the good stuff we want to keep and what's the stuff we want to avoid? Good volatility. Okay, good, Walter. Which means movement. You got to see price action. In other words, if I was to pull up an ES chart here, it probably was in a 6-tick range most of the morning, so there's no movement in ES, and that's why we don't trade it. So yeah, volatility, it's got to move. It's the price action, it's the fuel in our engine that gives us money in our trading account. Moves too fast, Chris? Good. Yeah, the speed in which it moves comes into play. Now, NASDAQ is notorious for moving quickly sometimes, particularly at the open. And so in some respects, it's like wrestling a woolly beast, and we'll look at that in a minute. How about this? How about the way it consolidates on retracements? Let's look at some good examples. Here, she was kind of behaving herself. That's a nice little box, right? Right at the mid-band. Nice, tasty little box. This one may be a little tougher. See how it kind of chopped around the mid-band there? So isn't it also how clean it is, if you will, on the retracements to be able to get in? If you have it, and we'll look at some cases where it's not so clean, and it makes it much tougher to get in or to decide what to do with it. Chris is saying too much of a trading stuck in a trading range is undesirable. The chop, yes. That's a good one, Carl. Yes. Roger said this too. Good respect of swings, not erratic. Trending nice price action retracements. Good. Exactly. That's what we want. So if you're trading an instrument and it's not showing the good characteristics, let's move on with NASI here. So here's another long here. That's fairly clean. A little bit uncharacteristic of NASI, but we know why. This is the Asian session, so it's thin. Or the European session. No, this is still the Asian session. So all these retracements were pretty clean. Came back to the mid-band bounce, mid-band bounce. They were all very nice trades, all long trades, right? We get into a little bit of trouble is when NASDAQ starts to do stuff like this right here. Now, what do we mean by that when it gets into trouble? Well, let's say, suppose that you were trading at midnight in the beginning of the European session, and you threw a little box on her here. Well, you got filled long, and then maybe it stopped you out. It's hard to say. Maybe you got back in. It looked like it was going to run up, and then if you were long, you definitely got stopped out over here. Now, let me ask you what to do. Let's say tomorrow morning, right around the open, you're getting ready to trade NASI, as an example, and you put a box on it. We can pretend this is the open. We'll actually go look at the open, but let's say hypothetically this is the open tomorrow morning, and you get stopped out on a full stop out right out of the gate. First 10 minutes. What should you do? Man, you know what? I've been in this market 10 minutes and I got a full stop out. Man, this is not a good way to start the trading day. I am not a happy camper. What do? This happens to you tomorrow, hypothetically. How do you deal with this? Do you get right back in? Revenge trade it? Chris says wait. Roger says stand down until there's a clear direction. Go get a crying towel. Walter, you always got good ones. Go get a crying towel. Pause and wait for another good entry opportunity. Exactly. Look at other instruments. There you go. Perfect. We all know NASDAQ's notorious for this, right? It's this kind of price action that kills you on NASDAQ. When she's behaving herself in a good trend like this, you can make money. No question about it. When you get this sort of jerky, whippy, pops up, you think you're getting long, comes down, takes out the bottom. Maybe you had short enable, now you're short. Comes up, pops the top, now you're long again. You're getting whipped around all over the place, taking hit after hit. Or maybe you just stayed long. Maybe you had, it was a green background. Maybe you're just getting the long. So you're feeling some heat, misses your stop. You think it's going to take off. And then blammo, full stop out. I think we all would agree that when you see this kind of thing, you have to stay out of it until the market resolves itself. And that's true of any instrument. I'm not just picking on NASI here to pick on NASI. We all know that NASI can be a spastic little thing. But if any instrument starts whipping you around and you take a pop and the direction is not clear. So for instance, another good thing is that you start to see a striped background, right? Bars are yellow and then they're red and then they're blue and then they're yellow and they're around the midband and they're popping up. You think it's going to take off and then blammo back in your face. You want to throw a box on it, but you're nervous. So what do you have to do here? Stand down. You got to wait. Because you know what's going to happen. At some point, it's going to break up or it's going to break down, right? It's going to do something. And then we can be prepared to take action when it gets out of this melange, choppy stuff. Dennis says, I follow my trading plan about taking losses and profits as guidance. Okay, good. Yeah. Generally, if I take a pop and a market's looking like this, all chalky and stripy, choppy, yeah, I'll just stand down. I won't trade it until it figures itself out. I'll go look at something else. Let's look at some other examples of this. Let me drag down an oil chart real quick and look at some other examples of how chop can eat you up. And the key to get through it is to quickly be able to see it. Now I'm going to do some examples here, and then we're going to collectively look at some charts and pretend we're in real time to see if you can identify chop quickly. That's a key to survival, isn't it? The ability to see the chop quickly. Man, I'm trying to get this other chart and it won't come over. Hold on 1 second. These screens are just not. I had that blowout with a motherboard the other day, and so I had to reset the video cards. I'll be darned, I cannot get over to the screen. Fourth screen is just something. Okay, hold on. Quit whining. Just get the chart over here. All right, stand by. There we go. Stand by 1 second, please. Okay. Here's a good example right here, where, for instance, on oil at this particular, this is actually right now. This is what oil's doing right now. It's right here. This is the actual oil chart right now. Now, at what point would you think that you've identified the fact that it's chopping around? Would you say right here? Would you say right here? Would you say over here? All right, let's do it this way. Here, let's do it together. Let's do it this way. And it's okay because you've actually seen it. Let's do it together. Let's come back and do some oil chop identification. And let's do this morning together. All right, I'm going to advance the chart starting from, oh, wait a minute, this is the 15th. Wait a minute, where's the 16th? Oh, I have the December up. No, here's the 16th right here. Let me do this. I'm going to do a couple of these. Let's do a couple of these together. This is coming into the morning of the 15th. Let's do a couple of these together because this is really good. This is going to be a good exercise. You're going to like this, trust me. All right. So I'm going to slowly advance a crude oil chart. And when you think you've identified the chop, you type in a C. And we're going to start with yesterday. Okay? I'm going to slowly advance the chart. And when you type in a C when you think you identified chop. So we're going to start right here at this midnight line right here. Don't type in a C yet. I'm going to advance the chart. We're watching it in real time. And when you think it's chop, you type in a C. Ready? Here we go. Okay, we're at 4:50 in the morning. The pit opens coming up in about 30 minutes, 5:30 on Wednesday morning. There's 6:30, so we got the room open. Live room's open. Crude pit's come and gone. Type in a C when you think you see chop. Okay, I'm going to pause right there. I'm going to pause right here. Here you're at 7:30 in the morning. What is the one thing that I didn't do that you need to do that helps you with this? What's the one thing we need to do as traders that helps you see the chop that we didn't do when we started this exercise? I intentionally didn't do it. Draw the lines. That's right. Draw the lines. Look how much the lines would have helped you. We can clearly see several levels of support and resistance that we could put lines. Pretty straightforward here, right? Here's the top. Here's one swing. I'd call it sort of an intermediate swing. And then, of course, you see there's another one down here, right? So drawing lines on your, and this is especially for the new traders who've just joined us or if you're on free trial, drawing lines on your charts is critical, and it should always be the first thing you do every single morning. You come in, open up whatever you're going to watch that day, and you put your lines on your charts. And we all would agree that as long as a market stays within the confines of the lines, it's said to be range bound and sideways. Then we look at, the size of the range. Is it 20 ticks or larger? If it is, then we have to decide, are we going to buy or sell it if we want to trade it? In this case, you could say pretty much from here to here that the market was sideways to up. So, you did have a couple of trades you could have taken, right? And here was a bounce off a support level. If you didn't get that, of course, you see there's another one right here. There's one that came close, a couple of them right here. And so, if you trade this, you trade ranges like this, we know that you scalp them. Scalping being that when you get a pop up to the top where the resistance level is, you take the coin off. If you have two on, of course, you trail a stop and get out of the second contract until you get a runner. And then once you get a runner, then it changes. Now, where this somewhat normal program started to fall apart on oil, you could make the case was in here. I could tell you, whenever you see price that looks like this, you pretty much want to stay away from it. Okay. I mean, yeah, you could make the case that there was a buy here at the mid band, but you went through some angst as it sort of chopped around and never really got to the top here. You know, it's shooting up, you're down, comes right back to your entry. And by over here, you should have definitely gotten out of it, right? Because then you get this huge spike down. Now, if you've tried to go in on oil and trade this, you know how tough this can be, and it's $10 a tick. So it's not like Nazi and the other ones, Weimer and Russell at $5 a tick, right? In other words, the risk is twice as much in this instrument. If you get bit on a 12-tick stop, it's not $60, it's $120 per contract, right? Okay, everybody got that pretty well. You saw the chop, and the lines helped, right? Okay, good. Now, let me advance a little bit further, and then you tell me when you think we've gone into a trend. You don't have to say what direction it is. You don't have to say up or down or what kind of trade you're going to take. You just type in a T. I'm going to advance it beyond here, and you type in a T when you think a trend is in place. And then if there is a trend, we'll talk about the trades. Ready? Here we go on crude. T for trend. Here we go. Now we're right at 7:30 Pacific, and we've already looked at this, so let's move it forward. Okay, here you're at 7:36. By the way, just a pop quiz. Why did we get all these yellow bars at 7:30 on Wednesday on crude oil? Was there anything that caused this to happen, you think? Crude 7:30 on Wednesday? Anybody remember? Was there anything going on at this time? Because up to this point, it hadn't moved much. You know, it was kind of in this range right here we had with the lines, right? That was inventory day. That's right. It was inventory day. We trade inventory. And this wasn't much. It was a little bit of a shotgun. I mean, 7:30 started right here, and all these bars printed in a minute. 7:31's over here. So all these bars printed in 1 minute. You couldn't have traded that anyway, right? All right, back to the task at hand. T for trend. Here we go. 7:38, 7:40, 7:41, 7:45. Now you're 15 minutes into the inventory numbers, right? Yeah, you're 15 minutes in. 15 minutes in. Okay, 7:50, 7:55, 25 minutes into the inventory numbers on crude. Type in a T if you think you see a trend has formed. Okay, I'm going to stop it right there. I must say that I'm quite a bit shocked here. We only have 5 people that responded, which is not good. So either you're asleep, or you're not paying attention, or you just don't want to participate. Either way, it's fine. I mean, we try to do these exercises so you can see in real time how this works. The 2 that got it right were Walter and Chris F. They typed in a T right here when this popped up, which is true, and that's where you should have typed it in, right here. And if you didn't type it there, by the time that it did this, and then it pulled back to here, and I paused the screen for a few minutes, or for probably 30 seconds, and talked about right in here, this was a long trade right here. You've popped up through a range that it was in. You now have a green background. The mid band and all the bands are stair stepping up. You are in an uptrend. You are buying retracements, and the first entry was right here. Right here. So you were in a trend as of here, and you were buying this. This was a buy right here. And I believe Gary or myself or both of us called this out in the live room. So you got to be able to pick this up quickly. I would suggest doing this. Does everybody have market replay? Anybody not have market replay? You just go to marketreplay.net, put the market replay module in there, and get the market replay, record the market, and then replay it. You can do different speeds of it. Now look, if you didn't say that if you don't want to do market replay, what I would suggest is whenever you have spare time, even if it's like 5 or 10 or 15 minutes, you just got some spare time. Maybe you have a cup of coffee, you're taking a break. You pull up a chart and you pull up an instrument. Doesn't matter which one, any one that you want to trade, and do this exercise where you slowly advance the chart. Okay? You're in a range, you come out of the range. You see it pop up, it turns green, you're looking for a retracement. Bam, you get it right there. You see it, you take it, you get the long. You're waiting for another retracement. Pulls back, hits the midband, bam, there's trade number 2 right there. Now what this exercise is going to do, it's going to help you see these trades in real time when you start looking at charts and the bars are flying all over the place, and maybe you have a little sense of confusion right now when you're looking at a chart. It's going to help you a lot because you're going to say it's pattern recognition. You're going to say, wow, look at that. I've seen that before. I've seen that before. Yeah, you know what? Look at that pullback right back to that midband. Look how it's sitting right on there. There's a long trade right there. I should box it in to take a long only. That one didn't work out. That one stopped out. So you got 2 longs out of there. You got this one, 2 nice longs, and a stop out. The blue bars on the left to buy. Brian, not sure where you're talking about. Can you give me a time or a level? Are you saying these ones right here on this pullback? Yeah, you could have boxed it there. Yeah, that was actually a legitimate long term. That one right there, 745. Yep. Background's green, blue bars, midband stepping up. You're buying retracements. Absolutely. That was a legitimate long trade right there. No problem. All right, we had a question to look at some currencies. So let's do that. Somebody had asked about some currencies. Let's mix it up a little bit. Get some currencies. Anybody trade currencies? 6E, 6A. Somebody was asking about that. Who was it? Carl. All right, Carl, let's do that. He asked about 6B and 6J. So let's start with 6J. It's the Japanese yen futures. Charts loading. Stand by. Okay, on the Japanese yen, 6J, is there a trade on 6J right now? Yes or no? 5 seconds. Type in a Y or an N. Just look at this chart. Y or an N. 4 seconds. Look at the chart. Make the call. Just hit a letter. Bam. That's it. That's all you got to do. 3 seconds. Yes or no, is there a trade right now on 6J? Would you pull this up and take a trade right now? Yes or no? 2 seconds left. Got to be quick. Can't sit around and think about everything sometimes. You got to know. 1 second left. Trade yes or no? No. Time's up. All right. Everybody got that correct. Now, here's the follow-up question. I see a long trade on here. I'll give you 10 seconds to type in either the time when it occurred or the level at which it occurred. The level is over here. Here's the numbers. 10 seconds on the clock. There was a long trade, so the question to you is, where was it? And we would be in it if we took it. So the answer of no was correct. We are in the thrust part of the move because we missed the long trade setup. Where was it? Where did it occur? I see some numbers coming in. I see some numbers coming in from Chris F, Michael P. Hey, Michael, I didn't see you come in there. Roger, Jay, Carl, Rob, that's looking pretty good. Walter, I like that. Brian, perfect. Byron, Peter W, good. All right, time's up. We've got to be quick on these. I'm going to do a lot more of these. We're going to get quicker on them. Okay. All right. Here we were clearly. Let's retrace a little bit. So we can see that 6J was in a little bit of a downtrend here. Came up, series of lower highs, paused here, came up. Arguably, this was a short trade here on this break of stealth. You come down, you put in a bottom. Now it comes back up here and it pauses at the mid-band. Would you have taken this long at this particular time? Probably not, because at the time this region box formed right here, the background was still red, and you might have been thinking short only, right? You're coming off of a downtrend, so your region box would probably have been short only, I'm guessing, which never got filled. So now, as you're watching this market pop, it's coming up out of here, 6J, right? Let's do this in real time together. We have a somewhat opaque neutral color background. However, the bars are blue, and it's taking some swings. Now, let's watch what happens. Now, whenever you go into a trend move, whether it's up or down, there will always be a thrust associated with it that normally will change the background to the direction of the trend. In this case, it's up. Why does this happen? Well, what's happening is you can see that many factors are in play. You're taking out swing levels. You've poked through a resistance level like this. You can see right here that the mid-band has pushed up slightly. You have a nice, thick, pretty nice nice green stealth line following the market up. The bars are blue. Background is green. When you see this condition present, when this condition pops up, your spidey trading sense should perk up a little bit, and you should say, what? Hey, wait a minute. We got a fresh swing here. We got a green background. We're no longer going down. We're not going sideways. It looks to me like we're going to start heading up. So I'm going to do what? Fill in the blank. Our spidey sense is perked up, right? Background is green, taking out a swing. Bars are blue. I'm seeing things step up. Got a green stealth. I should do what? Buy a pullback, right? Look for a retrace for me to buy to get in the market. This is your first clue. So when you see this tomorrow and you're looking at your chart, whether it's red over here or green, it doesn't matter. When a swing is taken out and it's heading down, you're looking for shorts on pullbacks, right? You're in a trend now. You've broken out of the whatever range you might have been in. Now we advance the chart, we advance the chart, we advance the chart. Now, look, we've talked about this before many times. We're not at the mid-band yet. So is it okay to throw a region box on here with long only? Yes or no? Is it okay to put a region box there, long only, at 1655 Pacific? Yes or no? Yes. Good. Because for those of you who are new, and you may have not seen that before, we talk about the fact that you think about retracements as kind of a strike zone, right? So here you are, a batter in the box. Your shoulders are here and your knees are here. Whether you play softball or baseball, it doesn't matter. It's the same principle. Sweet spot usually is the mid-band, somewhere in the middle of the strike zone, right? Here's the upper part of it. Here's the lower part. So markets, when they retrace, they can come back somewhat shallow. Now, it's tough to take retracements like this. If you haven't at least broken on line 6 or a stealth line, let's say that the retracement is hypothetically like right here. That's not deep enough. Why is that not deep enough? Yeah, and you're right, Brian. This would be a long only box. Now, let me alleviate a little fear. Now, and I know I've talked to quite a few traders. I know how you feel about this. You're like, Charles, you know what? I'm just nervous putting a box above the mid-band. I've been messed up. Well, you don't have to worry about getting messed up here, because guess what? You're not taking shorts, right? In other words, your argument might be, well, what if it goes deeper? What if the market comes a little deeper? What if it comes down into here? Well, then my response would be, good. That's excellent, because now you got a chance to box it even better down here, right? And the critical takeaway is you're not short. It's not going to get you in a trade here because you're long only. And yeah, you're right, Roger. There's no meat on the bone here. Look, if it's only pulled back like 4 or 5 or 6 ticks from a swing high, even if you go long only and you get filled on the close of a bar, what's not to say that you get a double top and the thing flips right back in your face? That's why we tend to look for retracements that come all the way back at or near the midband, because there's sufficient meat on the bone to get a trade out of it, which is exactly what you got here. Good. Yeah, so I mean, if you said anywhere around 88640, 88645, 88660, anywhere, if you saw these yellow bars and you said this was the trade, 1650 to 1655, anywhere in here, yes, this was the long. Good. All right, let's look at something else. I think he wanted to see 6B. Let's do this. Let's clip through a few of them. Let's clip through 6A real quick. That's the Aussie futures. And we'll circle back. We'll get YM, and I want to get a gold in here. 5-second pop quiz on 6A. Current status. 5 seconds on the clock. L for long, S for short, NT for no trade. L for long, S for short, NT, no trade. 5 seconds on the clock. Right now, 6A. Let's say that you were trading 6A and you pulled up this chart and you looked at it. What would you do? You should know instantly. This is what you want to get to with your muscle memory on your trading mind, right? You should. Well, that's a lofty goal, and it's a good goal, is to try to get to a point where you just look at a chart and instantly you know what to do. You don't have to hardly think about it because the price patterns are ingrained in your subconscious. 3 seconds left. 2 seconds. LS and T. Time's up. No trade. Mainly because you can see here that obviously everybody can see that we are in chop. We are going sideways. We're in the range, and right now the range is too tight to trade, and you are sitting at the worst possible spot to get into it, which is the midband. So even if you threw a box on it, by the time it closed up, you'd only get maybe 4 ticks. And if you wanted to short it, by the time it closed down, it's going to hit support and probably possibly come back in your face. This is a no trade. NT, no trade. Good. No. That's right, Brian. Okay, let's pop up 6B. That's the British Pound Futures. 6 1/4 a tick. We're going to do the same exercise. L, S for short, long. So I'm asking you, is there a trade on this chart right now? Yes or no? If so, L for long, S for short. And if there's no trade, you would simply type in NT. Four seconds left. Two seconds. Time's up. No, there's no trade here. The long trade, if you were going to get in this trade, was obviously over here. You can see that there were a couple of spots where 6B paused at the midband, just above its support level right here, and then you had another chance for a region box just above the midband right here, where you got 2 spots to get long. You are now in the thrust part of the move, up. And so absolutely we do not buy or sell thrusts. Unless there's an exceptional situation like a news event or an opening of a market, or the market's flipping and running, or it's like this morning was a good example. The market was up It hit the tops and then started taking the tops out and hardly ever looked back. You either had to wait for a deep retrace or jump in and try to get in, get some of the move. But that rarely happens. If 6B retraces, you can type in a number or an area. If 6B retraces and you were watching this market, where would you buy it on a pullback? We all know that the trend is sideways to up, so we're buying pullbacks into support. Where would you buy 6B if you were going to buy it? Where would you buy 6B? We'll put 10 seconds on the clock. 6B. Looking to buy. Spread out the numbers a little bit so it's a little more clear. No, it's too big. 5 seconds left. If 6B pulls back, where would you buy it? Four seconds left. What you gonna do, 6B? Time's up. Now, a lot of you typed in the mid-band, and I think that's perfectly fine. We all look for mid-band trades, but let me show you something here that I think you're gonna like. Can you see this little colored band area here? And let me show you. Here's a good way. Here's a good way to think of it. Can you see this like sort of different color green right in here? And then see how it's below it too? Like right here, let me do it this way. I'll do it this way. This is really your sweet spot, right? I mean, the mid-band is the optimal trade, no question about it. In other words, a retracement into the mid-band would in a bounce or a pause or some way to get a region box on the chart. But we know it could go a little less, a little more shallow. Our bias is the upside, so we would do a region box with a bias long only, and it could only come down into here, right? This is the nature of our little sweet spot strike zone, right? Could come down into here. That's deep enough for a trade, yes. Could come to the mid-band, and we all know that it could come a little deeper, and we're okay with that. Because if it continues to come lower, if you box it and don't get filled long, we're not getting short. Good. Everybody got that? Perfect. All right, what do you want to get up next? Let's take a vote. YM or gold? Weimer or Goldilocks? What say you, team, tonight? And I'm not going to do the exercise on the current deal here. Go back to the open. We're going to look at these markets. It's a mixed vote. All right, we'll start with Weimer, and then we'll do gold. Now I'm going to show you where it was at 6:30 when the market opened on WYME. It looked like this. Stand by. There you go. Here's actually 6:30 right here. Here's the beginning of 6:30. Right in there. Right about in there. Why are there two 6:30s on here? Is that just a misprint? Why are there two 6:30s? Is the chart screwed up? What do you think? Here, let me widen a little bit more. There's two 6:30s on here. Is that just? Is it like the Twilight Zone? Why is there two 6:30s on here? Shouldn't there just be 6:30, 6:31, 32, etc., etc.? It was fast moving. That's why that happens, right? If you ever see on a chart and you go back and you were wondering why am I saying three 6:30s or why I say four 6:30s or whatever, it's because it's shotgunning. All these bars are coming in a minute. In a minute span of time, the bars are shotgunning. And so should you have bought YM at the open? Now think about what we just did on those other charts. Is this a buy on YM at the open? Should we be getting in here right now? Tomorrow morning we wake up, we put YME up. You're going to trade YME that day. Is this a buy at the open, yes or no? Should you be buying this tomorrow morning if it looks just like this? You shouldn't even have to think about that. We just covered this on like 6 charts. No, 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 no. This is the thrust. So back up for a second. Pop quiz. How do we know we're in a thrust? How do we know we're in a thrust? How do you know? Let me put it a different way. Here's a good way to think of it. What needs to be present for us to have a thrust? Something has to be there for us to have a thrust. Otherwise, we don't have a thrust. And what is it? What needs to be there? There needs to be something present on the chart. Everybody should know this instantly. Right, a trend. There has to be a trend. So let's just explicitly put this right here. So it's just ingrained in everybody's psyche right here, okay? Trend equals thrust and retracement. That's what that is. Now, I'm going to state the obvious, but it might be required to be said, right? In the case of an uptrend, when a market is moving up, that is said to be the thrust. Yes? In an uptrend, when a market is pulling back, that is said to be the retracement. Now, how about a downtrend? Let's find a downtrend. Let's do that same exercise. Let's do an exercise together on this. So when you see it tomorrow morning, you know. And I'm going to do it this way. I'm going to give 5 seconds. And here's YM. This is the other morning at 9 o'clock. We're looking specifically at this move on the right-hand side of the chart. Is this move a thrust or a retracement? Type in a T or an R, or you have 5 seconds. This move right here where I have my cursor, is that a thrust or a retrace? T or an R? 4 seconds left. Is this a thrust or a retracement? You don't have to explain it up or down or how you think about it. Just type in a T or an R. Is this a thrust or retracement? 2 seconds left on the clock. Time's up. It's a thrust. How do we know it's a thrust? What did we say about, like, not even 10 minutes ago? When we see something change in the background, when a market takes out a swing to the upside or downside, so what happened right here when that swing was broken? What color background turned, and what happened to the midband? Here. You have a red stealth. You've taken out a support swing. The midband is stepping down. All the bands are stepping down. The background turns red. You have predominantly red bars. You now have a downtrend. The definition of a downtrend is lower highs and lower lows. And so now you're looking for a retracement to do what? Get short, right? Where are you going to short this market if and when it pulls back? Where would you short YME on a retracement? So the definition of a retracement as a downtrend is what? That it's going to go this way. That's how you know you're in a retracement, because now you have a trend. Where should theoretically YM come back to if we're going to get a trade? Here, tell you what, let's do this a better way. Let's do this. Let me do this a little bit better way. Some of you typing in numbers. Okay, let me do it. Let's do this exercise a little bit different. I'm going to advance the chart like we're watching YM in real time. And when you see the trade, you type in a T. You ready? Here we go. I'm going to advance it slowly, and we're going to pretend that we're live. We're live watching YM, and we see the downtrend set up with the thrust down right here. And now we're going to get ready to take a trade together short. Now you type in a T when you think the trade is set up and you're ready to take it. Okay, advancing the chart. 904. 905. Let me blow it up a little bit here. $9.18. I'm going to trace in about 10 minutes. $9.44. In about almost a half an hour pulling back here. Plenty of time to watch the market, right? Okay, 9:46. Remember, you're typing in a T when you think the trade is set up and it's ready to take the T or the short. Trend is down. We're shorting it, right? Okay, now we're at 10:10. All right, I'm going to stop it there. Now, I want to come back and look at this real quick, okay? Here's the thing. Some of you typed in, I won't name names, but it's okay. It's okay. Some of you typed in an early T when the market came to here, like on these bars right here, and even these bars right here. Now, what do we say about that? In terms of depth of retracement, remember we talked about that. Depth of retracement. What if you just come back and you kiss the stealth line? And you're just, say you're just like less than 10 ticks off the bottom of the swing. Is there meat on the bone to take this? Probably not. Unless you are in some out of control, crazy uptrend or downtrend, and you're only getting like little tiny pullbacks, and then it takes off another 30 ticks. That would be the exception. In a case like this, it needs to come higher. There's no meat on the bone. In other words, even if you put this region box for short and it closed down, by the time you get to here, you're only going to get maybe 4 ticks. It's got to come back up into this area here, at least. Now, many of you typed in a T right here when these bars were forming, and that's good. Because in this case here, you would have short only enabled, and on a close below, it never closed on the box, so you never got the short. So it's perfectly acceptable to say, at the time that these bars popped up, a lot of you said, okay, that's the trade. And that's good, because there's enough meat on the bone in the retracement, and you're close to the mid-band, so that could be illegitimate. Now, you got to be careful how you box that, because you don't want to get faked into. I would not use bar close here. That's got to be a region box, and you engulf the wicks of these candles so you don't get faked into something. Because in this case here, it went higher and actually sat above the mid-band. So this is what I was saying earlier. You're not long here. You never got filled short, so you turn around and you rebox it right up here, yes? Bias to the downside. You're taking shorts only. Some of you typed in T's here. Perfectly legitimate. And you got filled probably on that bar right there, that close. And so you were a little bit in the money and then came back into the box, and then it rolled over. And I don't think I saw any T's over here. Obviously, everybody sees this is not a T. By the time you get down here, you are fully baked into the thrust down. So the trade is not here. The trade was not here. Let me be clear on that. This was a no trade. Too early, not deep enough. This was a legitimate box. That was a legitimate box. That was a legitimate box. And by here, if you called it out here, you're in the thrust, so you missed it. Good. All right, let's get a gold chart up here. We're going to run out of time in a minute or two here. I want to get at least one more on here. Let's get gold up. Stand by. Now you can see here what really I would suggest everybody to do, and even if you're a seasoned veteran that's been trading a long time, volatility changes over time. You know, markets get active, they slow down, they behave nicely, then they start messing up and getting choppy. You should always be on the lookout for a good trade. Gold is one of those things, if you've traded gold, it's $10 a tick, so it's pricey like oil. Okay, let's come back to the open. Gold is notorious for going sideways for some period. It could sit for a half an hour and move like 10 ticks. And then blammo, all of a sudden it'll give you a run of like 40, 50, 60 ticks. That's just the way gold is, right? You want to do the trade exercise again? Anybody, you find that helpful? It's going to be tougher on gold. I can tell you that. It's going to be tougher on gold. It's going to be a lot tougher on gold because of the choppy nature of gold. Yeah? You want to do that? All right, let's do one more. Let's do one more on gold. I'm going to do an easy one, and then I'm going to do a hard one. Okay? Let's start with the easy one. Here we go. This is on gold the other morning at 7:30. Here we go. Type in a T when you see the trade set up. I'm going to state the obvious. Everybody can see that we were in a downtrend on gold, and so we are shorting rollovers into resistance, right? We are shorting rollovers into resistance, so you got to tell me where you see the trade, okay? Here we go. 736, 737, 740, 745, 747, 748, 755, 57. You're almost at 8 o'clock. 57, 59, 8 o'clock. Time's up. Now, almost all of you got this, and that was perfect. As these bars were forming at the mid-band, this was your trade right here. Good. You would have been with a nice good region box, you would have been filled short on that bar or that bar. If you engulfed the wick of that candle, it would have been on that bar. If you had it tighter, it would have been on that bar. Good. Everybody got that. Okay, now a tougher one. Now a quite a bit tougher one, because this is the way gold is. Okay, gold's not this nice friendly thing. Sometimes it can be a woolly beast. You're going to have to wrestle that bear. Okay, I have another easy one. I'm not going to give you any more easy ones. I'm going to give you a tough one. Ready? Because this is the way gold is. Okay, last trade call of the night. All right, I'm going to start advancing the chart, and you type in a T where you see the trade. Ready? I'm forewarning you. This is going to be a little tougher. Okay, now this is midnight. Okay, so you're coming out of the Asian session into the beginning of the European session on gold. Remember, the background is red and the trend is down, so we're shorting, right? We're shorting gold in this condition. All right, I'm going to stop it right here. Many of you typed in a T when these bars formed right up in here, and that was correct. Depending on how you boxed it, you probably got filled short on that bar right there. You were in the money a little bit here, and then it came back into the box and it went a little higher. Now, for those of you who weren't already in it from here, you could have absolutely reboxed it right here, short only. Trend is down. Probably would have been filled short perhaps on this bar right here. This went a little deeper, went all the way down almost to support, so you were in the money, maybe even got the scalpy off right here. Now, let me ask you this question. If you see price action that starts to look like this, and I'm going to tell you how you see it, and we call it out in the room to help you. Okay, so you can see that we have swing levels established here and here. Here was obviously the thrust. Here was the other trade from earlier. This was a short trade roll over here, and this was the thrust. So we started our exercise here on that trade. It was already in the thrust part and put in that fresh swing low. You're in the Asian session on gold, going into the European session. Here we retrace. We come back up. We roll. Now, the important thing to note is this. What happens with this bar right here, and what happens with these bars right here? Let me help you out. They're not getting, is it going back to the bottom and breaking it? So this pattern of that we had here, in order to have trend continuation, we should at least check the swing and possibly break it, as we did with these thrust moves over here. Retracement, breaks the spot, retracement, breaks support, retracement, breaks support. We need to come down and check this. Did these two swings come down here? No. That's right. This is a higher low. That constitutes a higher low. Twice. It did it twice, not just once. Twice. As soon as you see this and you're in a downtrend and you're short, what should you think about doing? I'm not going to show you what happens. I'll pull that back a little bit. What should you think about doing? What should be going through your head right here when you see this and you're short? Maybe you got the scalpy off, maybe you didn't. It's hard to say, but you're still short. One or two contracts, whatever. You're short here. And you see two higher lows. What should you think about doing? And let's say you're short on that bar right there. So your initial stops, let's say your initial stops is sitting way up here. 12 ticks. That's where your stop's sitting right now. And let's say you didn't get the scalpy off. Good. Take profits, get out, close it, drag your stops down, all of the above, all of the above. Because if you'd waited to see what happens here, as it's chopping around your entry, see, because it came down, put this swing, came back, another shot, check the swing. Now it's chopping around here. It spent 15 minutes chopping around here, right around your entry. Okay, we're saying you got filled short somewhere in here. You're up a little, you're down a little. It's not going down. You can just hit close, just flatten your position and get out. That's the easiest way to do it. You can take your stop down to like right near where you got in, and then bam, it would get it. You lose a few ticks. Do not, if you see this happening and it's not following through on your trade, it's perfectly acceptable to close and look for another trade. It's actually good because you're avoiding getting a full stop out when it came up here. If you sit and do nothing, it's going to come get your stop, and you're going to take a full stop out, and you don't want that, right? Okay, good. Sorry I went over a little bit. We did get a little bit of a late start due to the